What's going on, guys, and welcome back to another video. In this video, we're going to be breaking down this exact trade that we took here on Wednesday, September 25th. You can see we took our first short position right here, scaled into our position right here, and took our profits off right here, which made us a little over $6,000 in the span of 20 minutes. I'm going to give you guys not only how I was able to break down this trade, but also the pre-market outlook and how I was able to anticipate this trade before it happened, as well as post-market outlook as well, some things I could have done differently, as well as my risk management and psychology throughout the entire trade. But before we get into the video, make sure you guys all follow me on Instagram at Arkhamtrades. Thank you. So the first thing we want to do is go into our Spark Trading Journal, and if you guys want that Spark Trading Journal, it's going to be the link in the description. But we can click here on the pre-market routine here for Wednesday, September 25th, and essentially I was anticipating price to break above this order block level or break back above these previous highs to then potentially reach lower down into the London session lows. And if we look at this depiction, it was before the market even opened. I was anticipating price to either come into this order block level or break above this previous high to then come down here into these equal low levels for a continuation to the downside. Next thing we can do here is we can go into our trading journal. We made about $5,976. This was a 930 breakout for a reversal to the downside. I'm going to go into charts now and give you guys a top-down analysis and break down this trade from top to bottom. So the first thing we want to look at is the daily time frame, and the first thing I want to take note is obviously this discount wick. If you guys don't know what this means, well, essentially we have this long wick here inside the marketplace, and if we anchor a Fibonacci from the high to the low, we get the 50% of this wick level. Essentially, that 50% can sometimes be a support level. It's a hidden inefficiency that not a lot of people will talk about, but hopefully in this video you guys can start implementing this into your own trading. So obviously this is an inefficiency we want to see the marketplace reach back down into before potentially reaching back higher prices. So obviously the trend is higher prices, but we're looking at taking a counter trend trade after price then comes above these all-time highs. Obviously there's no more liquidity above us, but there is a lot of inefficiency below us. So obviously the clear lining here is I'm anticipating price to see some type of rejection here to potentially see a drop to the downside, giving a retracement for a counter trend move. Now I'm going to go down to a 4-hour time frame to get additional context. Down to a 4-hour time frame, we have this 3 drives pattern where price came up higher, took out liquidity once, came up higher, took out liquidity for a second term, and then took out liquidity for a third term right here. So obviously this is a clear indication that price should find rejection here after taking out that liquidity for the third time. This is referred to as the 3 drives pattern. As well as if we look below us, we do have this trendline liquidity where price is making higher highs and higher lows. And when we're thinking of liquidity inside the marketplace, we have to think of it from the perspective of a shark, right? How can we screw over the most traders, right? Most traders see this trend line as an uptrend. So most likely they're going to put their stop losses back below these previous lows as price continues higher. And once we identify an area to where now we want to take the market lower, those traders are now screwed, and this could then solidify a even harsher move. So you want to identify where is the most amount of liquidity at in one specific area, and you want to then target that specific zone. So we have this low, this low, this low, this low, this low, this low. We have multiple points of liquidity down here. Most likely, if price is going to find rejection off of this 3 drives pattern here after taking out this buy side liquidity, price is going to see a very harsh move. Now we're going to go down to a 1-hour time frame to get additional context. On our time frame, we can identify that 3 drives pattern where price comes up higher, takes out liquidity twice, and for a third time, and we see this drop to the downside. Identify this bullish fair value gap as a potential inversion fair value gap to then see a continuation to the downside. As well as we can also identify these equal lows. Just like I mentioned, once you have multiple points of liquidity in one specific area, price is going to want to then take that point out. So we have not only the trend line liquidity, but we also have this double bottom. Retail sees this as support, right? They're seeing this as support and the market should continue higher. And essentially, how can we screw over the most traders and make the most profit possible? Because at the end of the day, these markets are ran on greed. So as we come up higher to take out this point of liquidity, I identified it by this rejection wick. And then as we break below this bullish fair value gap, this is our clear indication that order flow is shifting from higher prices to now lower prices, right? We can identify it shifting from the higher prices to the lower prices because price is breaking through bullish inefficiencies. right? Usually price should hold inside this bullish fair value gap, but since it's not holding inside this bullish fair value gap, instead it's breaking through it, then price could then invert this for a continuation to the downside, continue to seek lower and lower prices, reaching down into this trendline liquidity and even down into that 50% of that discount wick. Now we're going to go down to a 15 minutes time frame and we're going to play it back exactly from where we started, how I was able to execute on the trade, where I was able to scale in, and how I was able to maximize my profits as much as possible. 9:30 is when the stock market exchange opens, and that's when the most influx of volatility kicks in for the Dow Jones. So I'm anticipating price to break above this high point, find a measurement of rejection, to then see that continuation to the downside, right? You guys seen it in the pre-market outlook, exactly what I was anticipating. So once you guys create that pre-market outlook and create that pre-market plan, now you guys want to execute, right? If price can break up here and show some type of rejection, then obviously we can take that drop and continue to the downside. But if price does break back above these highs and does not signal that price is going to drop, then obviously we could potentially see a continuation to the upside. When it comes to framing a bias, you want to use if-then scenarios just in case your original bias doesn't play out. So let's say the original bias for lower prices didn't play out. Then if that doesn't play out, then we could see a continuation to the upside. So you guys want to have multiple frames of reference when it comes to bias. But 9:30 is about to open up. Let's see what happens. So exactly just like that, 9:30 opens up. We saw that push to the upside, giving then this rejection wick. So obviously this rejection wick here by this long wick level is signaling to us that as price came up higher into this liquidity pool, sellers were then met. So obviously as we took out liquidity, sell orders were placed, meaning that buyers were not strong enough to continue the market higher, leaving this massive rejection to the downside. This rejection wick is showing exhaustion at this specific level, and we could see a rejection to the downside, as well as we can identify this last down close candles in the form of a bearish breaker. So a breaker is when we have a high, low, and the price comes higher to create a higher high, and then we break back below this previous low. So this is kind of like a break and retest pattern where this level of support right here, right, was then broken, and now price can come back into it for an overall reversal for a continuation to the downside, reaching down into these equal low points. So obviously at this specific level, I took my short inside this breaker level, stop loss back above this breaker high, reaching back lower prices into those equal lows for over a 4.8R. Let's see what happens. Price then comes back higher into that breaker level. Then we see this break back below this bullish fair value gap, and I want to scale into my position if we can see the market reach back into the 50% of this inversion fair value gap. So obviously on the 1 hour time frame, we had this bullish fair value gap. Price just now broke back below this bullish fair value gap. So now we could see this inverse, right? The same thing like this breaker where we break through this level of support to then see a reversal for continuation lower. Same thing here. We broke through this bullish fair value gap. We could see a retracement for a continuation to the downside inversing. So I put my limit order at the 50% of this inversion fair value gap, targeting back below these equal lows. When it comes to trade management, the best thing you guys want to do is you guys want to maximize on your overall profit. If you guys are identifying that you're on sides and price could potentially create a big move, the best thing you want to do is you want to add to your winning position and maximize on that winning trade for as much as possible. So if we can see price come back into this inversion fair value gap 50%, we would then take the short for a continuation to the downside. So essentially now from making a 4-to-1R on this specific trade, we can now make over a 6-to-1R because now we're adding to our winning position. The win is going to be a lot more massive. We can see price coming into that inversion fair value gap level and then see that drop to the downside, reaching down below these equal low points, and the market does eventually continue even lower, all the way down into, you guys guessed it, that 50% of that daily discount wick perfectly. That's gonna be it for the video. If you guys got a lot of value out of this video and you guys want to support me further, make sure you guys click the like, subscribe, and comment what you guys want to see next. And if you guys want to join Spark Trading University, that's me and my brother Spec Trades private mentorship. That's going to be a first link in the description. We're accepting 5 new people that click that first link, so make sure you get in. That's going to be it for the video. I'm Arkham. Be safe.